I've been in this industry a lot. I've looked at thousands of P&Ls. The difference between a good one and a bad one could be costing you time and a whole lot of money. Let me explain the way I would want to read a P&L. My name's Ryan. I'm super passionate about restaurant accounting. If you think this is boring, you should probably keep scrolling. But if you're a restaurant owner, I'm very confident that we can help you make more money month over month. So if I look at a good P&L, yeah, I mean, I think in a funny way, you want to say oh my gosh, the heavens are moving. But honestly, it's almost like relief because you have confidence that the P&L is accurate. You have confidence that the P&L is consistent, and you have confidence that you could take this document that we've spent a lot of time on and make actionable decisions to run your restaurant better for the next month and hopefully drive some more dollars to the bottom line. So let's go through each section of the P&L. So first, on the top, you got sales. That seems very intuitive, right? My sales are showing up there. That's how much revenue I'm bringing in. Well, the truth is you're actually bringing in a few other pieces of revenue, right? All of your sales from food and beverage and events, maybe retail, those are showing up there, right? But the stuff that you're collecting for sales tax and tips, those are not showing up on your P&L, and that's why it might look a little different to you. Second, your cost of goods sold. Your cost of goods sold are showing up there by all of the invoices that you purchase within a given time frame. So if it's May and you get an invoice that's dated May 5th that you bought maybe chicken or meat from, that's gonna show up on there. Some people think, well, what about the invoices when I pay them? That doesn't necessarily show up on your P&L. It shows up the date that you receive the product. That's called accrual-based accounting. So if you receive food, let's say in April, but you paid it in May, that's not gonna show up on your accrual-based accounting. But if you receive the invoice in May and maybe paid it later down the road in June, that actually will show up on your P&L. And that's the only way you can read an accurate P&L for our industry is accrual-based accounting. Next are your payroll costs. So the payroll is very basic. Every week or every other week, you're running payroll, that comes in, that shows up on your P&L. You have the payroll expenses, maybe it's the payroll related to servers or bussers or hostesses or the kitchen, that's all gonna be on there. The payroll taxes will be on there, maybe some of the benefits as well, but the deductions and the tips that you're paying out, these are items which we refer to as pass-throughs, so you can't use them to calculate profits. Those are sitting on the balance sheet. The other part of payroll that we do that most restaurant bookkeepers should do, unless they don't know what they're doing, is there should be an accrual to account for the extra days of the week or the extra days of the period that are not on there, right? So if you have 2 payrolls, that's 28 days of payroll, but there's 30 days in a month, there's 31 days in a month. Those extra few days should be accounted for in an estimate or an accrual of some sort. And then the last things, of course, are direct operating costs or general and administrative. Those could be supplies, those could be office supplies, those could be credit card discounts, those could be insurances. Those are pretty self-intuitive. However, some things like insurance and rent, you don't often pay those on an exact monthly basis. Sometimes you may prepay those and then you have to allocate. Or rent, if you're on 13 period based accounting, you need to spread those 12 months of rent onto 13 periods. So there is some accrual kind of gymnastics that you have to do in order for that to be accurate on a period by period basis. But ultimately, that's what's showing up on your profit and loss statement. Here's the thing. The fact is we built FIXE because we want to allow restaurant operators to spend more time on what they do best. That's running their restaurant. We want to give you more time to run your business and to give you more time to take action from the data that we're providing you. I hope this helps you understand your financials a little bit better.